Hello friends, welcome to another video on technical analysis. In this video, we are going to talk about the rules and the guidelines of Elliott wave. If you haven't watched the previous video on Elliott wave, I recommend you to watch those videos first before watching this video. Okay. And I have already uploaded two videos on Elliott wave, a powerful tool, and Elliott wave, the corrective waves. So the purpose of those two videos is to give you a basic understanding about the price movement and the impulsive and corrective waves. However, there are certain rules and guidelines that one should follow or apply while counting the Elliott wave. Okay. So in this video we'll see about the rules, and there are a few guidelines, okay, that we can use uh, while counting the Elliott wave. And these guidelines are the observations that have been made over the years. And there were a few guidelines, like the rules were uh, made by Ralph Nelson Elliott. Okay, and while analyzing the chart, he found, or he discovered, that the market moves in certain patterns and they follow certain rules. Okay. The Elliott wave rules cannot be broken or changed, or once you have changed them, you are no longer trading the Elliott wave principle, right? So you cannot change, or you cannot modify the rules. Okay, and if you found, or if you find that some rules are broken, then you need to count the wave again. Okay, or you need to count them correctly. While the guidelines are just observations, okay, of the market or the price movement, which can change anytime. So the guidelines are not as a particular rule. The guidelines can change, and those are basically the observations that were made on the charts. So guidelines can be changed, but the rules can never be changed. Okay, so let's go through the rule and the guidelines. And let me tell you that the purpose of this video is just to give you overview of the rules and the guidelines. And when we will go through the real examples, or we will discuss this Elliott wave theory in detail, then you will have a better understanding of the rules and the guidelines. Okay, so I'm not going to give you some detailed explanation or the psychology of the participant behind the market movement, and how the rules were formed, or what are the uh, psychology behind each and every rule. Okay, so that part I'll cover on the later on videos. So so let's go through the rules. The first rule states that the wave 2 should never go beyond the start of wave 1. Okay, so if you see this as a wave 1, then wave 2 should never go below the wave 1. That means if this was the starting point of wave 1, then wave 2 cannot go beyond this wave 1. And if it does, then you need to start the counting again. So if you see a wave, impulsive wave, or a first leg of this move, and this wave 2 is going beyond the starting point of this wave 1, then you need to start your counting again, or you need to go through the bigger picture and see if a bigger correction is on the way. So the second rule states that the wave 4 should never move in the territory of wave 1. That means the wave 4 can never come to the territory or to the high of this wave 1. Okay, it should never go beyond this line, or it should never go uh, in this zone of wave 1. This will violate the Elliott wave rule. So wave 4 should always be above this wave 1, the high of wave 1. So as per like the most often, or the most frequent occurrence of this wave 4 is likely to end in the zone of 23 or 38% retracement of this wave 3. So wave 4 is likely to end between the 23.6% or 38.2% retracement of this wave 3 leg. Okay, And the third rule states that the wave 3 is never the shortest wave. So if you count a wave or impulsive wave and you find that the wave 3 is the shortest leg, that means you are violating the Elliott wave rule. Or it can also happen that the wave 3 is extended one and you will find more moves to the upside. So that will give you the whole count of the impulsive wave. So if you get a case where wave 4 has gone into the territory of wave 1, that means either you are counting the wave structure wrong, or it can also happen that the wave 3 is extended one and the wave 3 will be subdivided into 5 wave move. Okay. So once this impulsive wave, once all the rules are met and you have counted the wave correctly as per the rules, then you will mark this move as an impulsive move, and followed by this there will be a correction, which is ABC pattern, a 3-leg move down. Okay, so this corrective move I've already discussed few corrective move in a separate video, Elliott wave corrective move. Okay, you can watch that video also to get an understanding of the corrective move. Okay. So the guidelines, there are a few guidelines or observation of the market, okay, and we'll go through the guidelines and see how we can use these guidelines to make a good trading or investing decision, okay. So the first guideline is a projection of waves. That means if there is an impulsive move, okay, and wave 3 is the extended move, then the length or the time period of this wave 1 will be similar to the wave 5. So if the wave 3 is the longest wave or extended wave, then you can use the length of the first wave to project the length of the fifth wave. You can simply project the length of this first wave at the point 4 and you will get projected length of wave 5. So if you see a impulsive move where the length of the wave 3 is quite extended, or wave 3 is extended, then you can use the length of this wave 1 to project the length of wave 5. Okay, so that is the projection of wave, and we will see real examples where you can use the length of this wave 1 to project the length of wave 5. Okay. The second guideline is a law of alternation. That means there will be alternation between wave 2 and wave 4. Okay, this one is very good one actually, and it will this law of alternation helps you to have an idea what kind of wave or what kind of pattern is going to form for wave 4 by seeing the pattern of wave 2. Okay, so this wave 2 and wave 4 are likely to alternate, and if the wave 2 is quite quick, the wave 4 will take some time to form. So that is alternation of time. And if the wave 2 is quite deep, that means the retracement of wave 2 was quite deep, then wave 4 is likely to go for a lower retracement. It can happen that the wave 4 did a retracement of 23.6% only. Okay, or 23%. Okay, so I like to use the whole number, so 62% or 23%, okay, or 131.8%. That's so wave 4 and wave 2. If wave 2 is a simple corrective wave, that is, if it is a zigzag pattern, then wave 4 is likely to be a complex pattern or a triangle or say a flat correction. It does not, it is very unlikely that the wave 2 and the wave 4 are similar in nature, right? So if a wave 2 is a triangle pattern, then this wave 4 is likely to be a zigzag pattern. And if the length of wave 2 is big, the length of wave 4 is going to be small. So that is the law of alternation, and we'll also discuss about these in some video where we'll see some real example, or even I will show you one example where we can use this law of alternation to forecast the formation of wave 4. Okay. The third one is the channeling. That means an impulsive wave mostly forms a channel. Okay, and you can use the channeling to forecast the wave 4, wave 5 or wave 4. Okay, so just a minute. That means this the impulsive move is likely to form a channel. Okay, just a minute. Okay, this way. So the impulsive wave is likely to form a channel where you see, or you can use this channel to project the wave 5, say if this was the case. So you see a channel, or you can use a pitchfork tool at this point with projecting wave 1 and wave 2 as the point, and this one as the handle of the pitchfork tool. So you will find a channel that can form. So drawing this channel is also important if you are using this wave theory. Okay, and once the channel is broken out, you can simply project the length of the channel to mark the possible end zones of the corrective wave. So if you found a channel forming, you can simply project this length of the channel. When the prices has broken out of the channel, you can simply project the length of the channel to form to mark the potential area where the corrective wave is likely to end. Okay, so you can simply project the channel length once the prices are moved out of the channel. So basically, this is also a part of geometry trading. I will be making more videos on geometry trading that is very useful for day trading purpose. Okay, so geometry trading is very important, and you should have a good understanding of that and how you can use that geometry trading for the projection of the targets. Okay, so again, if this price has broken uh, this channel, you can simply project the length of the channel again to get next zone or next area where the pattern is likely to end. So we project this length, and we can mark the areas where the prices are likely to reach or prices are likely to reverse. So this one is actually a very good setup for day trading purpose. And believe me, I've been using this channeling method for long, and I find myself very good opportunities or good entries at the edge of the lines. Okay, this projection of the channel it can also be applied to a horizontal channel, where we can project the length of the horizontal channel. Once the prices are broken out of the channel, we can project the length of the channel to take or to mark the next price level where the market is likely to head. Okay. So as I said, say if the prices was going from this point at this point, from point A to point B, and there was some correction, then the next time the market is going up, you can simply project the length of this wave or this movement and at this point, and you will get a projected target for your entry. So this one is very useful, the projection of the channels or the price targets. You will find very useful when you are using the channels. Okay, and say if there was a a horizontal channel, the market was consolidating in this range for a very long time. Okay, so if the market was consolidating in this range, okay, just a minute. Say the market was consolidating between this channel. Okay, and once the prices has broken out of the channel, you can simply project the length of this channel to the upside, and you will see that the prices are very likely to reach the top of this channel, top of the projected length. Okay, so the prices, sorry, the prices are likely to reach at this point. So similarly, you can, if the prices have reached this level, okay, you can again project the length of the channel to take your next target or next uh, resistance zone. Okay, and again you will draw a line on this projected length, and you'll see most of the cases this market has moved to this point, or it has reached to the this point. I also have mentioned the importance of drawing the middle line. Okay, so it is very important to draw the middle line of each channel. Okay, and the importance of middle line, I have already talked about that in the uh, trading with triangle or trading the triangle video. You can watch that video, and you will find, or you will find yourself that once you have started projecting the length of this channel to the upside, or say in case of a downtrend to the downside, you will find that these projected lengths or the projected levels are very important, and market always try to acknowledge those levels. So this one I can say is a part of geometry trading. Also this one where we project the length of the channel when the prices has broken out of the channel. So we'll talk about, I'll make a separate video on geometry trading, and believe me that geometry trading is very important or very useful tool where you can project the length, project the potential targets. Okay. So that was part of the guidelines. Like the first guideline is projection of waves, where we can use the length of the wave 1 to forecast the length of wave 5. Also, in most of the cases, the wave 3 is likely to end between, it's likely to end at 161.8% extension of this wave 1, or say 2.618% extension of this wave 1. So I'll not talk about the Fibonacci extensions or how the waves are interrelated between each other, because I will be making a separate video, or even for when I'm discussing some other points regarding the Elliott wave. I'll in the meanwhile I'll show you how the waves are interconnected, or how the waves are projected using the Fibonacci tool. Okay, so let me go through one real example where I can show you the use of channel and the projection. Okay, so let me share my screen. Okay, so actually, okay, so this one was actually a follow-up. I would like to do a follow-up on the previous video, which I talked about on this pattern, which was repeating itself on a time frame, on a 10 minutes time frame, on an hourly time frame, or even on a daily time frame. So the pattern was actually a fall to the downside, followed by a triangle pattern. Then again, the third leg move, the third wave of this impulsive wave, followed by a flat correction. And then the fifth wave, which was subdivided into 5 waves. So we were actually, when I was recording that video, Elliott wave, a powerful tool, I was talking about this wave structure and how this pattern was repeating, right? We were at this point, I told the market is likely to form a triangle pattern at this point, and once we breach below this level, we'll see a whole new leg that has been formed. Okay, so it was the same case where we see at this, once the prices has breached this level, it went down. Okay, so let me show you one example for just a minute. So as I was saying, once you see this channel forming, you can simply project the length of this channel to forecast or to see the potential target shown for the breakout of the channel. Okay. So as you can see, I have drawn or I have projected the length of this channel over this point on this edge of this line, upper line, and I've drawn this line. So this will be my next target once I see a breakout is happening. Okay. And if you see this pattern, if you see this was reached quickly after some correction, and the prices again broken out. So I will project the length again. As I said, I will project the length again. Okay. So once I project the length again, I will get this point, right? Right. So if you see this was on the edge of this line, right? And the importance, I was also talking about the importance of the middle line. So the middle lines, you should always draw the middle lines for each of the channels, right? So if you see this one, the price just retested the high of this middle line, right? At this point, again, it went down. So drawing the middle line is very important, and you will find some good opportunities on the lower time frame or for the day trading purpose. Okay. So let me see if I get just a minute. Okay, so we have a case over here where a channel was formed, and when the prices has broken out of the channel, I was just projecting the channel. So let me show you once again. The data is loading very slow. Okay, so if you see this, this was going down in a channel, and once the prices is broken out of the channel, so I can simply use the length of the channel to project my potential target once the price has broken out of the channel. So I see at this point, and again I see the prices are broken out, so I can simply project the length of the channel again, right? Right at this point. So I see once the price has again broken out, I can simply project the length of the channel again, and you'll see this the prices started acknowledging the lower part of the channel, right? It was retesting this lower edge of the channel, and then even for this case, if you see, every time the prices are acknowledging the lower edge of the channel, so a breakout followed by a retest, right? So every time the prices are breaking out, they are retesting the edge of the upper channel line, and they are going upside. So for this case, even for this case, you if you draw a channel at this point, you can project the length of this channel every time the price has broken out of the channel. So this geometry trading is very useful tool actually to predict the length of this channel, and I will show you some real example or my personal observation how to use the geometry tool and how to forecast a reversal of a trade or of a price movement. Okay. So the key to that point is this middle line, and I'll show you some real example where this middle line is very important, and we can use that middle line to see the price movement or when a market is likely to reverse. Okay. So that's all from my end. Okay, hope you have liked the video. uh, do let me know. So even for this case, see, this was the channel going on, and once I projected this channel, the price went ahead, and we see this downfall. So I was projecting the channel every time, and you see, the prices was acknowledging the edge of the channels every time. So even I was talking about the middle, and I'll talk about this. This actually, this one is very important and like useful tool, where you will find the channels are very powerful tool, and if you start projecting the channels, you will get, or you will have a very good entry and exit point. Okay, so that's all from my end. Hope you have liked the video. Do let me know in the comment section if you have any suggestions. Okay, and also let me know, if you want to me if you want me to discuss on a particular topic. I'll make a particular video on that. Okay, so that's all from my end. Okay, happy trading. Okay, and uh, I always tell you that whatever the videos I'm making, okay, those are the patterns, or those are the tools that I've been using on my trading purpose. Okay, but that does not mean that you will apply those tool or those pattern directly in your trade, because I've been seeing the market of movement or the observations, okay, for a very long time. And as I said, the Elliott wave theory is very simple yet very complex to understand. And once, until unless you have practiced that theory on your charts for a very long time, or you have been using this theory for a very long time, I would recommend you to always use this theory with your own analysis, or with your own setup, or with your own strategy to enter and exit the market. So say if I am trading based on a support and resistance level, if I have an understanding of this wave pattern, I would likely to get a confirmation, or I will see a confirmation that the market is will be likely to go up. Okay, so this was a triangle that was forming, followed by this 1 2 3 move. So the fifth wave of the triangle can also reverse from this, before touching this E point. Okay, or if you see the middle line, as I said, I always like to draw the middle line. Okay, so if you have drawn the middle line, you will find that the middle line is very important. And uh, I'll talk about one secret of this middle line in one another video. Okay, and hope you will like that secret. Okay, how I can draw the channels precisely using the middle line. So that's all from my end. Okay, hope you have liked the video. Do let me know in the comment section, and please subscribe the video so that you get updated with the latest video. Okay, thanks all. Have happy trading, and wish you a good luck. Bye.